Okay. All right, Andrew, I think we can get going.
Sure.
So just a little housekeeping. I have people's question. You can ask it at any time. You don't have to wait till the end of the presentation. So just either that, just put it in the chat box and I will read those to Mary Beth and we'll get going. All right, Andrew, take it away.
Sounds good. And then also, yeah, so we'll keep our cameras off for this, and then mute your audio as well. But as far as today, so this is our homeowners auto and umbrella insurance webinar. We got Mary Beth Cafferty from Comparion Insurance, previously Liberty Mutual with us. She's a personal insurance agent there. I've been there for 22 years currently, and she brings a lot of expertise and some funny stories and what she's come across in her years with Liberty Mutual and now Comparion. So without
Great.
further ado, here is Mary Beth.
Yeah, thank you very much, Andrew. I appreciate your introduction. And I also appreciate the opportunity to speak with all of you today. My goal really is to give all of you on the call a good refresher of your personal insurance and some advice and some common conversations I have with people and things to be mindful of. So that's my goal today, and I'm hopeful we can get through quite a bit. So if you go to the next slide. So our agenda, I do write all personal lines, as Andrew mentioned. So for the sake of my presentation today, we're really focusing on auto, homeowners, condo, and umbrella. I also insure rental property that you personally own. I insure apartment insurance. I write flood insurance. But for the sake of our agenda today, we're focusing on these four policies. So as many of you may be aware, personal insurance rates are on the rise. You can certainly go to the next slide, Andrew. That's fine. Insurance rates are on the rise for all carriers, and many people are prompted to contact me when they get their renewals, and it's often a good time to shop. Or someone may get a new car, and that's prompting their rate to go up and then to take a closer look at their current coverage and premiums. I think what I hear, the commercials that we see, the pop-ups on social media, they're only talking about price. And what I'm hoping to really help you understand is balance price and coverage, and also how to look for that yourself when you're talking to your agent or any agent and getting some quotes. Like with anything, there are some good ways to save on your premium and not so good ways, and we're going to talk about that. And my advice is always to get multiple quotes. If you really start to focus on your insurance and getting quotes, talk to a few different agents. I might explain coverage one way, someone else might explain it a little differently, or different things might come up in your conversation, and that will really give you a great perspective and help you figure out your best next step. Okay. So again, asking questions is also key when you're getting quotes and talking to anyone. So some common things I hear are on this slide when I start to talk to someone or someone contacts me to quote their auto insurance, for example. We're going to start with auto. I pay $100 a month. I have full coverage. I have basic coverage. I don't need a lot. I don't drive a lot. I don't own property. Um, what many of us are not aware of as consumers, Massachusetts is a state that does not use credit to rate your auto policy. They use a lot of other rating variables, is what we call them. So the obvious ones to us as drivers is where I live, so my zip code, the car I drive, the coverage I carry, how long I've been driving, and my driving record. Those are obvious to us. And multiple cars, multiple drivers, that's clear. What's not obvious to you as a consumer is that your Part 5, your optional bodily injury to others, which we're going to go over the coverage in the next slide, but that is a rating variable. And what that means is that if I carry 100,000 per person, 300,000 per accident, or higher for my optional bodily injury, when I go to get quotes, I'm getting other carriers' better rate. Okay. The state minimum in Massachusetts just increased, but it's been 20,000, 40,000 for probably 50 years. And that means per person per accident. So 5 people are injured in a car accident and I carry 40,000 in coverage. It's 40,000 divided by 5. Okay. So the higher your liability, the more protected you are as you're driving around, and also the better rate you will get when you shop it. Okay. One thing that Andrew and Rick and I talk about is that your solid liability and property damage coverage on your auto insurance is really a foundation for your financial security. So you don't want to be dipping into savings or an emergency fund for something that you could have just paid a little bit more in premium for and adjusted your auto coverage. And I'll talk about that a little bit more on the next slide, a couple of examples. So sometimes when people go online themselves or when they shop it themselves or they just keep renewing the policy, I had that happen recently. A couple had 50,000, 100,000 for liability, and they were shopping their rate. They hadn't looked at their coverage in a long time and their life had changed. They had young children, they were homeowners, they were high income earners, very common, but or if you just go online yourself or shop it and the person quoting it for you just keeps your coverage the same and doesn't really talk to you about it. Okay. Another thing that is affecting all of us these days is every claim I have has some impact on my rate. So if I have glass claims, towing claims, not at fault accident, it doesn't affect me as much as an at fault accident, but everything that happens has some impact on my rate. A tree falls on my car, not as impactful as an at-fault accident, but it does affect the rate a bit. And then when your rates are high, or your shopping at renewal can be effective, and again, also paying close attention to the coverage is what I'm going to advise and what we're going to go through. Okay, so you can go to the next slide, Andrew. So if you haven't looked at your auto in a while, auto coverage, auto policy, Massachusetts auto insurance is broken into 12 parts, and I'll just hit on some of the highlights here, and some things that can be a little confusing or that can get missed. Part 1 and Part 2, and this came up for me yesterday. I quoted someone's auto insurance, and she had 250,000 per person, 500,000 per accident. So very solid liability coverage. And her Part 1 coverage is reading 20,000, 40,000. And she asked me about that because it is confusing. In the state of Massachusetts, all drivers, Part 1 and Part 2 are compulsory or required to put your car on the road. And Part 1 is always going to read 20,000, 40,000. It's only covering you in the state of Massachusetts on public roads. Your true liability limit is that Part 5 coverage, optional bodily injury to others. And that's really what I was talking about in the prior slide and what I will be referencing. So the higher your liability, again, the more protection you have as you're driving around and the better your rate when you shop. Parts 3 and 12 protect you from other drivers. I was telling Andrew recently, I had a young woman I've insured. I have her liability limits at 250,000 per person, 500,000 per accident. She and her friend were in her car and they were hit by somebody who was uninsured. And she was telling me she had to replace her car, which is why we were talking. But she was telling me that she and her friend were injured and they were collecting on her auto policy under Part 12. Okay. Or I'm sorry, Part 3. So it can be very important to protect yourself from other drivers as well. Sometimes I'll see 3 and 12 at lower coverage limits than Part 5, but you're worth it. You want to protect yourself and you want to be noticing that and paying attention when you're getting quotes. Okay. Part 4, I briefly mentioned that on the prior slide, damage to someone else's property. If I cause an accident, damage to your car is covered under property damage. If I hit your car and it jumps the curb and it takes out somebody's front porch, a building, it is all covered under property damage. Sometimes I'll see people, I think the state minimum I know the state minimum for years had been $5,000. It recently just increased, I believe, to 30,000, which is still quite low. I had told Andrew a story years ago I had a colleague who left Liberty Mutual in probably 2007, and he went to work in the mortgage world. and he was working on a refinance for someone who had an accident, caused $70,000 in damage, in property damage, and he carried 50,000 in coverage, and he was taking out a home equity line to cover that $20,000 gap. And that premium difference at the time was probably $3 more a year in premium to increase it to 100,000 in property damage. So you don't want to be dipping into your emergency fund or your hard work to save and invest for something that would be a very small money difference on your auto insurance. Okay. So I never write a policy for less than 100,000. I often now go up to 250,000, and maybe it's $10 more a year. It's very small money. Okay. So the other parts to your policy can also be very important. Medical payments, it really complements personal injury protection. Even if you have very good medical or dental, there can be gaps in my coverage or not enough coverage. If my teeth are knocked out in a car accident, if I need a prosthetic, that's what MedPay does. So most carriers cap it at 25,000. I don't think a lot of agents spend a lot of time on that. I try to at least talk about it and quote it and include it. Okay. Most people, if you've shopped for a car recently, or depending on what you drive, everyone is concerned about Part 7 and Part 9. So when somebody tells me they have full coverage, that's what they're talking about. Collision always covers my car, always. If the accident is my fault, my car is covered under collision. I have to meet my deductible, and then my car is fixed. Your car that I just hit is covered under my property damage coverage. And you always want the collision waiver. That's a Massachusetts thing. You pay a small amount of premium for it, but my collision deductible is waived. If you hit me and you're at fault and you've got coverage, I don't have to pay my deductible. If I don't carry that waiver, I pay the deductible. I get reimbursed when the claim is settled. Small detail, but it makes a big difference if you have an accident. Collision also covers us for hit and run accidents, which can be pretty frustrating, but there's no one to collect that money from. So it's not going to affect my driving record, but I do have to pay my collision deductible if that were to come up. And comprehensive, that covers us for anything that happens to our car that's not a car accident. So again, a tree falls on the car, flooded, hail, a deer ran across the road, it was stolen, it was vandalized. Glass is also covered under comprehensive, and sometimes I'll see really high glass deductibles. So you just want to be mindful of that if you're shopping and looking at this at your own coverage. Very briefly, limited collision has its place really for older cars that you're not as concerned about collision. Just like it sounds, limited collision is very limited. I can't be more than 50% at fault. And I have to be able to identify the other driver that hit me, and they have to have insurance. What it really does is helps get my insurance company involved in the claim if I need their help. If I have a, '05 Honda and I'm still driving it, I don't really want full collision. Limited collision would be what I would choose to get my insurance company involved. Otherwise, I'm working with your insurance company to settle that claim. Okay. Substitute transportation. This is a big issue for some people. Pre-pandemic, Enterprise came into my office at Liberty Mutual twice in 2019 to encourage us as agents to include more rental reimbursement or substitute transportation. If your car's in an accident, it's in the shop for a month, and you need to rent a car, that coverage can make a big difference. They were encouraging us to put at least $45 a day. We had been commonly writing $30 a day in coverage, and that really was not enough. And their people were being frustrated that they didn't have enough coverage to rent a car. So be aware of that. If you're driving a larger car and you've got children or practice, or you've got a need for that big vehicle, you want to make sure you've got enough coverage if you had to rent a vehicle while your car's in the shop. And again, that's not maintenance, that's due to an insurance loss. Towing and labor, many carriers offer that. I often encourage people to get AAA. It's bigger, broader, and it keeps those towing claims off your auto policy. So if and when you're shopping your auto, that's the detail you really want to be paying attention to. If you're checking your current coverage, check your liability and check that property damage. And also, again, substitute transportation. Those are the things that can really have a big impact on somebody's rate. Okay. I'm sorry, on your on your claim, on your savings, and on your finances. Okay. You want to go to the next slide, Andrew?
So Mary Beth,
Yeah.
quick question.
Yeah, sure.
On the substitute transportation, the towing.
Yeah.
So if you have like, 3 accidents, you're just not lucky in one year, and they're not your fault, but you're using that towing, that can affect your rate going forward?
All claims will affect our rate.
Wow.
Yes.
Okay.
Yeah. So I had somebody a couple of years ago at a more expensive Mercedes, and he was shopping his rate because it had gotten pretty high. It was up to like $6,000 a year for this Mercedes. And he had had 3 or 4 full windshield replacements, and those windshields were about $2,000 each. He drove a lot for work. So occupational hazard, I think he was just on the road a lot, and he had, 20,000 plus miles a year on his car. But yeah, yeah, unfortunately, every claim we have has some impact. So AAA can be an attractive option for that reason. Okay. Does that, now we have a little quiz that
Yeah, and I was gonna say, feel free to enter these into the chat box. We wanted to just kind of mix things up a little bit.
yeah,
So
see if
yeah, so what type
what
of
I
auto
explained help.
insurance pays for damage to your own car, regardless of fault? So A, liability, B, collision, C, comprehensive, or D, the uninsured motorist? Any answers coming through there, Rick?
They are. We need the Jeopardy theme song to be
Yeah,
playing in the background here.
the countdown.
We've got B, B, and C so far. I guess we'll give it another minute. We have another B. I don't want to sway the answers here, though.
Hmm,
And one thing I forgot to mention too is that we'll be taking, questions at the end of every section here too. So feel free to add them to the chat box if you're thinking of something throughout. We'll stop at the end of each section to run through that. We'll also have a section at the end just for, open questions on auto, homeowners, umbrella, anything you have on your mind.
Great.
Okay, let's close out this trivia question. What is the answer, Mary Beth?
It is collision, part
All
B.
right.
Yes. Collision will always cover your car.
Okay.
So, okay, so no other questions that you see? Okay.
I think we're good. Rick, anything else
Yeah.
come in?
It,
Yep, we just have one. Like, where do you have service where you review your current auto policy and make recommendations?
I do. I think for all agents, really, none of us insure every person we speak to. So that's really just a kind of a built-in part of our jobs is to quote coverage and review coverage. And either I have a great option or not. But yes, I do that a lot for all the people I speak with.
Yeah, and Mary Beth's
Yeah,
she's been a great resource for our clients that, are interested in this, or they're getting a new car, or they bought a new house, or all kinds of
right.
different things. And so
Yeah.
it's been really, really helpful for the clients to look at this more closely.
Thank you, Rick. And sometimes the best answer is to stay where you are. And I think you find that out once you start getting quotes and once you start looking at your coverage and talking to a few different agents, you really do get to the right answer. So home insurance, with home insurance, whether it's a new purchase or a current home, a lot of the information I'm collecting or talking with you about is the same. So when I'm quoting property insurance, I am gathering all the information I'm gathering. I'm entering into my quoting systems for different carriers, and that helps generate the premium or the rate that anyone would pay. And then I adjust the coverages once I get into each carrier's quote. So a big sticking point lately for home insurance carriers is the age of your roof. So that is something you would be asked when I'm quoting insurance. Some carriers I write with will not insure a roof that's over 10 years old right now. That's not common, but a few carriers are really looking at that age cutoff. Most it's, go up to say 25 years. But at that age, you're really kind of getting toward the end of the natural life of your roof. And older roofs, naturally, we're not looking at it all the time. Often homeowners might wait until it starts to leak or it's a problem and then replace the roof. And that's what property insurance carriers are trying to avoid. So roofs have been a much bigger issue the past couple of years than they used to be years ago. So how old is your roof? You'll be asked about your plumbing and your electrical and your heating. How old is your furnace? Again, furnaces have a long life. I was talking to a colleague this morning who said she quoted someone whose furnace was 25 years old and a particular carrier would not insure that furnace, even though it was still functioning well and maintained well. So knowing how old your systems are or when things have been updated is helpful. If you have circuit breakers, most everyone has circuit breakers, or if you've updated the kitchen or bathrooms, the plumbing and the electrical have been updated over time. But those are things that agents are going to be asking or clarifying. I also look at pictures online. I take a look at the house, the year it was built, the square footage of the living space. Do you have a garage? Do you have a finished basement? What percentage is finished? Those is the overall quality of the home. Is it custom? Is it above average? Do you have a deck? All of those things go into my quoting systems, and it estimates the replacement cost for your house. So you're insuring for the replacement cost. The market value, as we know, can be quite different and vary town to town. How close you are, what city you're in, those will all affect the market value, but really your insurance is focusing on the replacement cost. Okay. It's not a bad idea. I know during the pandemic, the cost of building materials really increased. So there are cushions built into every homeowner policy. A cushion, expanded replacement. Some carriers offer 20%, some 50%. Some offer guaranteed replacement no matter what. They're going to replace your home. So even if the estimate's a little, say it's 800,000 to replace your home, it actually costs 850. You want to make sure you have that added coverage. And with some carriers, they guarantee the replacement. Okay. The other thing you want to pay close attention to when you're looking at your homeowner coverage page, or you're getting quotes, or it's a new purchase, are endorsements. I do spend time on additional coverages or coverages we add on to a standard homeowner policy. Water backup coverage, I always add this coverage. If the sewer backs up into your home, you are not cleaning that up yourself with a mop. That's going to be ServPro, Clean Joe. It's going to be some professional service to help you. You might need to move out depending on the situation. Some carriers offer 5,000 in water backup, 10,000. With some carriers, I can go up to 50,000 or a percentage of the dwelling coverage. And other carriers, I can offer full water backup. So noticing you have water backup is good. Making sure you know what the coverage limit is and if you're comfortable with that is also important. So if you're comparing quotes, if one carrier is offering you 50,000 and one is offering you 5, you want to be mindful of that and aware when you're making a decision. Okay. It can happen for all kinds of reasons, but certainly if somebody has a sump pump or a French drain, that's even more reason to add water backup. But I did have somebody a few years ago where a tree root grew into the sewer line for a neighborhood and the entire neighborhood was impacted. So it can happen for a lot of different reasons. Service line coverage and equipment breakdown. These coverages have been recent additions for home insurance carriers, probably the past 5 years. Service line is, say, the sewer line that connects your house to the street is not covered under standard homeowner policies, and it's not covered under the city by the city or town. I used to get offers in the mail for that, so companies would just offer that coverage and you could choose to buy it. Now it's an endorsement. You can add that coverage onto your homeowner policy. Gas line, sewer line, you know, any connection to your home to the street. Equipment breakdown. I had a woman a couple of years ago. This is also a more recent addition. She had a power surge and her whole AC unit was fried, and that was a $20,000 unit. Equipment breakdown would be coverage that would help in that situation, and it's for the systems of your home. Escape fuel, if somebody has oil heat, you may have seen this at times on the news. It will be different. There'll be stories about escape fuel. If your oil tank were to leak and go undetected, that is not a covered loss, cleaning up the oil. So if you catch it early, they just plug up the hole, they put down some kitty litter, they replace your tank. If it's going undetected, that's when it can be a big problem for a homeowner. I have oil heat myself. You just want to be mindful that that coverage exists, and you can add it onto your homeowner policy. Ordinance of law coverage, this is often kind of skipped over too. Ordinance of law defaults to 10% of your dwelling coverage unless you increase it. And ordinance of law coverage, if a city or town ordinance has changed since the time your home was built, 20 years ago, 100 years ago, whenever it was built, you have 10% of your dwelling coverage if you have a claim or loss to handle that ordinance change. If it exceeds 10%, that would be your responsibility. Many carriers go up to 25% or 50%. Some offer 100% ordinance of law. Years ago, I took an insurance class at Liberty Mutual, and there was a claim that came in that was a home burnt down in New Jersey, and it was built very close to the road, and Liberty Mutual insured this property. The town ordinance had changed since the time this home was built, and Liberty had to dig a new foundation for this property. So that would be an example of ordinance of law, and 10% is probably not going to cut it in that situation. Okay. Earthquake, some people are concerned about it, others are not. It's not covered under standard homeowner policies. I mention it. Not many people choose to add it, but it's something to be aware of. Identity theft, also commonly added. It's a good idea to, I add it. It's not terribly expensive, but can be very important or impactful. Same with jewelry. Certain high value items are limited in coverage on your homeowner policy. Jewelry is by far the most common thing people will add or expand coverage for. I also write separate jewelry policies, but sometimes people will add coverage for their golf equipment or their they might have a serious hobby or a side hustle and have hundreds of dollars in cameras and lenses. Those are always things you'd bring up if you have anything of real high value and see if it's something you want to expand the coverage for. So hopefully that's helpful when you're looking at that coverage page. That's the detail you really want to take in. And if you're getting quotes, you want to be looking at the endorsements, looking at your overall coverage and comparing that way. A good way to save on your homeowner premium, I didn't put a bullet point here, but the higher your deductible, the more you save on the total annual premium. And for some, maybe it's $150 a year, but over 10 years, that's going to add up. And you're really not going to file a very small claim. I very recently had someone choose a $50,000 deductible for home insurance. That's quite unusual, but that's what he was comfortable with. And his house was pretty much going to have to be gone. And he felt he had the reserves to be comfortable with that decision. So that's the way you save, and you go high and broad on some coverages that could really be impactful. So you can perhaps go to the next slide, Andrew. I think might be
Well,
condo, so I don't know if there's questions.
Were there any questions that came in there?
There was indeed. So Mary Beth, this is like making such a great point here, not to just focus on cost.
Right.
Because I imagine if you have a house built in the 20s with woodwork and crown molding, it's different than a 70s house.
It is, yeah.
But we do have a
for
couple
sure.
of questions here. The first one is, my experience with a claim, example, roof leak causes damage, is that companies that specialize in remediation and restoration tend to charge very high rates for the restoration portion of the work. From an insurance perspective, how many comparative bids are required before a claim for restoration is authorized for payment?
I don't handle claims directly, so I don't know that there's any specific number or requirement for you to get quotes, but I think it's a good idea to get involved and to get quotes before you start the process and speak to your claims adjuster about that. And I've also been educated recently by public adjusters who there's someone in my networking group who's a public adjuster, and Andrew is in that group as well. And he's really educated us on how he helps homeowners. So I think it's good to talk to several people before you make a decision.
Great. And lastly, is there a web page that explains all of these cryptic endorsements?
Well, I think many carriers do put this online. And really, what you can do is go to Google. And sometimes I'll advise that when I'm going over this, it's a lot of information. So if you're sitting around later or you're trying to re-explain it to someone, it's almost like playing telephone. You can go type in water backup coverage, Massachusetts homeowner, and you can read a little bit more about it. You can see how carriers describe it. And that can be helpful for you when you're putting it together later or thinking about it later. So,
Perfect.
yes, a lot of carriers put that online.
Great.
Okay.
All right. I think I'll
Yeah.
move on to trivia here.
Oh, trivia.
All right. So what does a standard homeowner policy not cover? If you were listening here, you would pick up the answer. But A, fire, B, theft, C, vandalism, or D, earthquake?
Yeah, looks like everyone heard that. So, yeah.
They did indeed.
Yeah,
Okay. Perfect. All right. So I'll skip on over to
right.
condo.
Condos. So, they're unique and there's a lot of pieces of coverage on a condo policy. So whether it's a new purchase or a condo you've owned for a while, whenever I start the conversation, especially when it's a new purchase, it can be very confusing to the buyer or to the condo owner. And I really start my conversation about Part A dwelling coverage. So, Part A dwelling coverage on your personal condo policy, it's also called an HO6 policy. That is written to complement the master policy, and the master policy is written to complement the bylaws. So, the bylaws are different for all associations. And there will be a section in the bylaws that describes how broad that master coverage has to be. And then the master is written to complement the bylaws. The master may also have added endorsements or broader coverage. So often it may say that on the master policy certificate, which is proof of insurance, and you need that if you're financing a condo purchase. So I help any person I'm speaking to figure out what the right coverage amount is for dwelling. And that is what the mortgage company cares about. That's all they care about. You care about all these other pieces, which I'll briefly talk about, but the lender is just focused on how broad that master coverage is. Over the years, I've heard lenders tell people, some mortgage lenders will say, oh, you don't need it. Oh, don't worry about it. It's confusing to the buyer. You do need it for your personal property, and there are other coverages I'll talk about. You don't need it to satisfy the loan because the master policy is very, very broad, or what's called all-in coverage. All-in is a common description when the master is covering the finished interior of your unit. Some cases you may be responsible for improvements and alterations. So if the condo was built in '09, I had this come up recently, 2009, and the new buyer is responsible for any improvements or alterations. If someone put in hardwood floors, if they put in some custom closet, something that wasn't part of the original sale, that's something that would also be part of their dwelling coverage. Okay, so I often run several quotes, especially when someone's buying it. It's a new purchase. I give them a range. If they're responsible for the finished interior and it's 1,500 square feet of living space versus 2,500 versus I quoted a condo recently that was 350 square feet. It's over in Mission Hill by the hospital. So that's a big difference in how much dwelling coverage somebody would need. What I really focus on and really help people focus on when they're insuring a condominium, I call them the big three: loss assessment, water backup coverage, and loss of use. Over the years, I've had many people with big claims, and these coverages make a big difference. Loss assessment, many associations, if they recommend you carry coverage, they'll recommend you carry 50,000 loss assessment. Loss assessment is if each unit is assessed a dollar amount due to an insurance loss. So maybe there's a gap in coverage on the policy or not enough coverage on the master, and your you've got a $30,000 assessment, that's your personal condo policy that's going to help you. Okay. I always quote the maximum, which for most carriers is 50,000. Some carriers it's 25,000, but I always max that out. If I don't increase loss assessment, a standard HO6 policy defaults to $1,000 in coverage. So it's really a big miss for someone. Okay. Water backup coverage. Sometimes people tell me they're on the higher floors. I don't, I think the master has coverage. If the sewer backs up into your unit, you want this coverage. I've had it happen on upper floors. I had told Andrew a while back about an example of a woman on the third floor, fairly new construction, poured kitty litter down the toilet, and all the units above the third floor had a sewer backup, and people had to move out while this was being dealt with. So, people do dumb things and throw things down the toilet that don't belong down the toilet. That's another piece of that. And Boston also just has old plumbing systems. So it can happen for lots of reasons. And it can be involved in, ripping the floor out, ripping out your wall. Again, you're going to need professional help to deal with that. Loss of use, big. I spend a lot of time talking about this. If I do not increase loss of use on a personal condo policy, it defaults to a percentage of your personal property. So say someone chose 50,000 for their personal property, maybe it would default to 12,000 or 15,000 loss of use. Loss of use covers you if you cannot live in your condo, you have to move out. It's additional living expenses, and you continue to pay your mortgage and your condo fees. I had a couple I insured in Boston a couple of years ago. They moved in January of 2022. The sprinkler system froze and burst the first weekend in February 2022. They were out of their unit for a year and a half. They had 60,000 loss of use coverage. We spent time talking about that, and they were comfortable with about a year. They ended up living with friends for 6 months once, and then they finally got back into their unit. So it can be a big deal. And it can be, dipping into other cash reserves that you have if you don't have enough loss of use. I didn't spend a lot of time on it when I talked about the house insurance, because homeowner policies have a much higher default, and it's a percentage of dwelling coverage. So it often isn't as impactful, or there's enough coverage on a standard homeowner policy. On condos, I'm making a lot more coverage choices for somebody. Okay. Um, Personal property replacement, you always want to make sure your belongings are covered to replace them. We all know what it costs to buy something used on Craigslist. It doesn't have a lot of value. Special personal property, special dwelling. Anytime you see special, it means really broad, really open coverage. So when you are comparing condo premiums, or you're getting quotes, or you're buying a new condo, that's the detail you want to be noticing. So if one person's quoting you $800 a year and another carrier is quoting you 300, you're going to be looking at the detail, not just of the Part A dwelling, Part C personal property and liability. You're going to be looking at these endorsements, and if you've got these additional coverages. Okay. If you rent out a condo, the policy changes. So many people might buy a condo as a single adult or as an adult, and then they buy a home, or they move out and they keep that condo and rent it. The insurance has to change, and the loss of use is your loss of rental income. So it's especially important too for landlords, and something that I really spend time on and go over. Okay. So those details on a condo are really make the difference for you if you have a claim or loss. So hopefully that helps, and you can go to the next slide, Andrew. I don't know if there was any
Mary Beth,
comment.
before
Yeah,
we get
yeah,
to umbrella,
yes,
if somebody has an unfinished basement, they get
yeah,
insurance, they live there for a while, they fix up that basement, but
right,
they don't tell the insurance company what they've done, and then they have a
right.
claim, there's a flood down there. Are they covered for that or no?
Well, the fact that the basement has been finished, yes, they would be. And that's really where that cushion is built in on any standard homeowner policy. Or, ideally you'd be updating your carrier if you're doing any sort of renovation like that, especially if you're adding square footage or finishing a basement. When a flood is involved, claims will always trace back to what is causing damage to determine coverage. So it depends what's causing the flood is the broader answer to that, but
Gotcha.
if that
Okay.
helps. Yeah.
Yep.
Okay. So Um, Moving on to umbrella liability. I know Andrew, Rick, and I talk about umbrella liability. I bring it up a lot with people I'm quoting and insuring. I used to insure one of the lawyers at Liberty Mutual, and she would give me really good umbrella examples, and I would ask her, or she would tell me everyone needs an umbrella. Now, whether you do or don't, but I always will mention it and explain it. It's especially important for people who are concerned about liability, who have assets to protect, who are high earners. Exposure can include, I'm always bringing it up, especially with teen drivers, primary home, your value is going way, way up. Um, Second homes, you have rental property, you've got that exposure of tenants. You want to make sure you're really having much higher and broader liability coverage. You've got a swimming pool, diving board, slide, trampoline, dogs, dog bite claims. Doesn't have to happen on your property. If I am walking my dog, I don't have a dog, but if I'm walking my dog, it bites someone, it's not happening at my home, but it's my homeowner liability that pays first, and then an umbrella would pay beyond that. Boats, ATVs, jet skis, contact sports. I'm volunteering. If I'm driving someone to doctor's appointments, that's wonderful. It's great to be involved, but the bigger, broader umbrella liability could be useful if you ever needed it, and it does come up in conversation. Okay. So umbrellas are written as separate policies. If you visualize an umbrella, I put your auto policy under the umbrella. I put your home under the umbrella. I put your second home, your rental property, your teen drivers get itemized. Um, a boat, anything that you own and insure gets itemized under that umbrella. And I write 1 to 5 million in personal lines. Okay. You have to maintain 250, 500 for your auto liability and a minimum of 300,000 for your home liability or property liability or boat liability in order for that umbrella to kick in. Those are the underlying coverage requirements, but it can be important coverage. Um, and then for most carriers, the lead line is considered an auto insurance policy. So I cannot write, for example, I write with Travelers quite a bit. I can't write standalone umbrella with Travelers. I have to write auto and umbrella together. I don't have to write the home. So for most companies, the lead line is the auto insurance. I do have a standalone umbrella carrier I like and I write with a lot. It's called RLI. And they don't care who your auto is with. They don't care who your home is with. They don't care who your second home or your boat. It doesn't matter. As long as you have that underlying limit. And they also offer 1 million for me as an insured person. I can buy that to protect myself from other drivers, and that's unique to RLI. Okay. So we've got a couple of umbrella examples. I've shared this in my networking group, and Andrew had felt
Yeah.
like these can be useful examples to kind of illustrate. Thankfully, we don't all think about the worst thing that can ever happen to us, but these can be good examples of these are actual claims that came into Liberty Mutual, and this is probably back in 2006 or 7. Liberty came out with some information for agents to help illustrate why this would be important, or if we were presenting, to give some actual umbrella claim or reasons why you might want an umbrella. Okay. So the first example, and maybe Andrew, you can read the second example, but the
Yeah.
first is policyholder pulled from a side road and struck a motorcyclist. The claimant has undergone multiple surgeries to save his leg. Medical bills are 400,000 and accruing. The attorney will not accept the policy limit of 250,000 because the policy owner owns 2 homes and retired after selling his 5 pharmacies. We advise him to retain his own counsel and he will have to make personal restitution. So again, the medical bills on that claim, 400,000 and counting, it sounds like the policy limit is 250,000 and then the difference.
Yeah.
Okay. And I'll let Andrew take it
Sure. And
over.
I'll just say too, I mean, I think like as like financial planners, this is an area we're always looking at with Umbrella because, all the hard work that we're going through in terms of like creating a financial plan. If, one accident like this comes in, it could really just sidetrack everything that we're working towards financially. So it's a bigger ticket item on our agenda. But in terms of this one, it's a policyholder struck a pedestrian that resulted in a traumatic brain injury. The claimant was the VP marketing manager for a national bank, so her traumatic brain injury prevented her from her VP role and material impacted her abilities as a wife and mother as well. So in total here, yeah, we had medical bills over 190,000, future medical bills of an extra 160,000, and the lost wages there. So again, $1.5 million was the total resolution on this case.
And there's a couple more examples. You want to keep going, Andrew?
Sure.
It's a fresh voice. Yeah.
You're good.
Yeah.
So yeah, policyholder's son during the course of an arrest fell on top of the police officer. I like the description here too,
I
knocking him to the
know.
ground. The officer sustained severe ligament and bone injuries to his right ring finger, dominant hand, and then due to his vocation, he underwent 4 surgeries with the potential for at least one more. Ended up missing 54 weeks of employment. So between medical bills and lost wages, we're looking at $425,000 there. And then Mary Beth, can you just I guess give another
Yeah.
overview in terms of like so
Right.
how umbrella kind of like just sits on top, I guess,
Sure.
of the auto here?
And this is another example too of this didn't happen at most likely at the person's home, and that can be confusing to people. It happened wherever it happened. Um, Homeowner policy would pay first up to its limits, and then the umbrella would pick up beyond that. So if I have 500,000 on underlying homeowner liability, that's paying first, and then my umbrella would pick up 1 million, 2 million, 3 million, up to whatever I have. They go in increments of $1 million up to five. So that's really how the policies work together and complement each other. And I think the other big gap, the final example is defamation and slander. And what we don't always realize is that our underlying home insurance policy does not really include the emotional side of liability. If you look at your coverage page, it will say bodily injury and property damage. If your dog bit me and I'm traumatized, it's missing that emotional side. And that's another reason where umbrellas are the biggest and the broadest. And it includes slander, libel, if somebody posts something online, um, those are all important reasons to have umbrella liability. Even, hopefully most of us probably aren't in the habit of doing that. But this example, the homeowner's policy does not afford coverage, um, the defamation or slander, because it traditionally does not create an occurrence resulting in property damage or bodily injury. So policyholder was a county administrator accepting bids for the county's healthcare management system. The claimant submitted bids, won, and the latter lost the contract due to statements made by the insured outside of the scope of her employment. The claim remains in litigation, and we continue to defend and investigate this matter. So your personal liability is covering you personally. It does not cover you for business. So if somebody is a business owner, or that's their business liability that's helping them. But obviously, there was some crossover in this case where she was things outside of the scope of her employment. Um, that is the emotional side, again, is a big piece to umbrella. Even if it's a frivolous lawsuit, you still would have to pay to defend yourself, and that's umbrella liability as well. And also, it gives you worldwide coverage. I know the lawyer I mentioned that retired, she worked on a claim. Liberty Mutual insured was involved in a car accident in Europe and unfortunately killed someone, and their umbrella policy was stepping in that case. So those are all reasons why our underlying policies, it's great to have 250, 500, but we can easily exceed those dollar amounts depending on the situation. So hopefully, I think my parting advice, I know it's 10 minutes to one. My parting advice really is, if you're getting quotes, is to really get involved in the process and have agents explain coverage to you, and really be looking at that detail of coverage, and check your current auto policy. I do this a lot with people. I've even had people, before you drive home, log in and fix this coverage, depending on what their limits are. And especially property damage is a big one I sometimes see at lower limits. But that's really my advice: is talk to people, get involved, and really look at the detail and ask agents to explain it to you. And that will really help you potentially find some great savings, ideally great savings for better coverage, but also just help you be informed and not be surprised in the event of a claim or loss, and wish you had paid a little more attention to the detail. So hopefully you found that helpful today.
Perfect. No, thanks so much, Mary Beth. We
Yeah,
appreciate it.
thank you.
A lot of great examples in there
Yeah,
too, I
Yeah,
think.
this is great. And Mary Beth, it
yeah,
goes without saying that people can reach out to you via email or give you a quick
definitely.
call to set up a time
Yes.
to chat.
Yes. Yeah, I'm happy to talk with anyone. Thank you.
Great. Any questions before we wrap up?
Think the last thing too
No.
is we're going to be just in the chat box putting a survey out there. So just any feedback, things you can send our way. It's always helpful. Just to, as we look to do more of these presentations down the line too.
And Mary Beth, we have
Yeah.
another question that came in. Can we comparison shop when it is not the renewal period?
You can. Yes, you definitely can. In Massachusetts, years ago, before, for those of you who have been around a while and remember when the state had um, regulated our auto insurance rates, as a state, we didn't have as much choice or as much competition, but there was always a short rate penalty that was charged on auto policies. That is not always the case now. Not every carrier charges a short rate penalty if you change prior to your renewal, but you can always shop, and home insurance is never short rated. You would always get a prorated refund if you switched mid policy, but it can be a useful exercise to start the process, even if you decide to wait to see what your renewal premiums look like, because it can take a little bit of, you might be getting multiple quotes. You don't always want to make a quick decision too. So yes, but there's
Okay,
a
and
yes with
that's
an asterisk.
that reminds me, you had looked at my auto stuff at one
Yeah,
point, and you had quoted me the current rates, the new rates, and the
right.
existing company was quoting me like the old rates. So then when we looked more closely at it, it was like $1,000 difference because the rate was going to go up if I'd stay with the old carrier.
Yeah,
So
yeah.
yeah,
And then Rick, also, we talked about you made an adjustment to your current policy that made a big savings difference. So
right.
yeah, yeah.
Yep.
So sometimes that's the answer. But and one last thing too, I know people will talk to friends and say, "Oh, I'm paying this, I'm paying that." Everyone's situation really is so different. Um, it's always good to, it's great, and maybe talk to their insurance person, but you want to get a few quotes and talk to a few different agents, is my advice.
Excellent. And we have the survey up here. If people want to click on that, we can.
Thank you, Mary Beth.
Yeah, thank you
Yeah,
so
I
thank
much.
have
you.
one question.
Yes.
Is it fair to say that like auto insurance rates in particular have just gone up a lot? Maybe I missed that because I came in a little bit late.
Auto and property are certainly going up for really all carriers right now. I would say I sometimes see the biggest swings in premium on auto insurance. So yes, and when you're paying close attention to your coverage detail, I've certainly saved people significant money and really improved their coverage too. So yes, I would agree with you. Rates are definitely on the rise for lots of reasons, but yes.
Now, was some of that like COVID related that you've seen?
I think cars are more expensive to insure, or I'm sorry, to replace. The bumper has a sensor, it has a camera, I think there's a lot to the rate that that affects the premiums, but that's one big factor.
Hmm.
Sometimes people say, "Oh, we could just bang it out." I don't think that happens anymore. I think that was like cars, bumpers years ago that you might actually have taken a hammer to,
Well, back in
but
the
thank
day,
you.
the bumpers, if they, you could hit a brick wall and there wasn't a dent in
Exactly. Yeah. Yeah, it's a little different now. But
it.
thank you. I really appreciate the opportunity to share some knowledge and hopefully help all of you look at your coverages a little differently and give you a refresher. If we go for year after year after year, really not looking at it. So when you're ready to shop it, you're going to hopefully be a little bit better prepared, a little better informed, and I hope you found it helpful.
We did. And there's one
Great.
last question that came in
Yeah.
before we wrap up. Used to be that as your vehicle aged, your insurance costs went down. Doesn't seem to be the
Yeah.
case anymore.
No, it doesn't. It doesn't. I agree. Yeah.
Hmm.
And I think sometimes people would feel it should go down. I don't know if in my 22 plus years of selling insurance, that wasn't always what I noticed, but it's something that I would hear people talk about. So
Perfect.
great.
Okay.
Well, thank you.
Yeah.